I would like to take a moment and talk to a lot of you DeFi folks that are here and sort of get your feedback. What do you guys think of it?
How do you guys think about between the identity keepers, transaction monitors, contract certifiers? What is the incentive for some organization to join that kind of group in the ecosystem and maintain those services? Are they getting some sort of transaction fee, or what does the incentive alignment look like?
Yeah, it's a really good question. I had a couple people ask this question. We were talking about it after the presentation this morning, and of course, we need to incentivize these entities to play a critical role. And I think part of the way we think about it is the potential value of tokenized securities on chain is potentially enormous. Nevin kind of highlighted that in his graph that he shared, multi-trillion-dollar market. And this is essentially, it's almost like we're taking the compliance function out of a bank and sort of dividing it up and giving it to, different entities that will each share a piece. And, we figured that we've looked at things like Uniswap has their V4 protocol where you can essentially create a hook on top of a swap function within a V4 pool and add any type of logic that you want to that. So, those that are adding that logic can extract fees from trades on pools. So we envision it being potentially something like that, where your actual filtering mechanism is this Uniswap V4 hook, and then you can set some sort of fee where each trade that goes through a pool, a compliance provider gets a piece of that fee. So we don't feel like we've necessarily landed on a super clear model of what that looks like, but we're working through different ideas, and I think that's kind of one of them.
I think another thing to add is that really fits with the transaction monitor, right? That's dealing with stuff like on chain, but on the folks on the outside might be bundling this with other types of products, right? Like the identity keeper could potentially be a centralized exchange, right? Where they have to do this anyways, right? Because they have to do KYC do CIP processes anyway, so they might be that. On the other side, with contract certifiers, projects potentially could self-certify if they want to go through the registration process, and then that will be their incentive.
And by the way, just to add also to Billy's opening, we are really interested in hearing from people building DeFi projects. Obviously, if regulation starts to happen on chain, we're interested in your thoughts in terms of how you feel like that will affect you. And also anybody else, I'm sure everybody has some sort of stake, whether, bringing a regulator's perspective or a DeFi developer's perspective. We're interested to hear people's thoughts on how this could potentially affect you in your world, and we're happy to answer questions and also add more details about the solution itself.
And especially, I would say, at least from my perspective, I'm especially interested in any concerns or objections. Please don't be polite. Please bring up any concerns or objections you have. Now, this is the forum to talk about that kind of thing.
So I have a question that I'm not sure if this was about the system itself or just about the presentation. So the way that it came across in the original presentation seemed to me to be extremely complex and difficult and obtrusive, and maybe that's not the way that you mean it. So when you tell the regulator, look, here are all the different aspects and all the things that we're going to require, it's important for them to understand the complexity. But I think for a lot of the people that are participating in DeFi want to hear more like, this is going to be easy and simple for you to do. But maybe that's not true. I don't know. So it seems to me that the two examples of doing, issuing a Uniswap contract or issuing a real world asset type of token might be very different, because when you say something like you need to have your contract certified, certified through the regulator could mean years and years for approval. Whereas something like a Uniswap simple contract, you might want to do 1,000 of those at the same time, and you don't want to wait at all. And so, are those like totally different certifications, or how are you thinking about this?
Yeah. So one thing I think is important to this is a very good question, and we want this to be easy, right? And so we're sort of, from the certification standpoint, right? That's the important part, is that the contract is to just make sure that the contract is following whatever rules it needs to follow. And those rules may be more or less burdensome, right? This is the idea why something like self-certification is important. So notice in this diagram here, the top is not the SEC or the government. It is an SRO, right? It's a self-regulatory organization. It'd be an industry group that we have to be honest, we have to figure out how it will work, but we are hoping it'll be, they'll be cool and they will understand, how DeFi works, and they will certify the contract certifiers, right? And so the contract certifiers then can work at the fast pace that DeFi needs to work at, right? And, if I kind of envision it that a project probably like Reserve, who's a big DeFi project, who's, doing lots of stuff, would probably go through the process of getting registered so that they can self-certify their own smart contracts. And then there's no really additional steps beyond making sure that their smart contracts that they're issuing are just complying with the regulations available, right?
I would just add one point, aside from probably the SRO, we tried to think as much as possible, to look at what existing processes and infrastructure already exist and see if we could just sort of tie a lot of that together. So when it comes to your identity, most people are giving their identity to a centralized exchange already, so something like Coinbase. So can we just take that process that you're already going through at Coinbase, where you're giving your identity, make Coinbase an identity keeper, and integrate that into the system? Transaction monitors already exist, so Chainalysis is doing a lot of on-chain transaction monitoring already. Can we just incorporate those processes that are already happening into the system? DeFi developers have to go through audits. Hopefully, they decide to go through audits to make sure their contracts are secure. Can we just take that process and add in this certification and sort of tie those pieces together?
So to your point, I think the existing KYB, KYC you can receive from the exchanges may not cover all the use cases in which you want to tokenize the securities. A lot of these securities are Reg D, Reg S, then they require accreditations. So it doesn't cover the full set. So I think it's going to be like a layer on top. But I'm curious what you mean by certification of an existing smart contract, because to my knowledge, compliance module typically affects on the transfer level, on the transfer function. So could you share a little bit more information about that?
Yeah, you go. I was just going to say, I think one thing to note about the solution we've presented is that it's really just focused on secondary trading of tokenized securities. So there's a lot of regulations that fall outside of secondary trading. So there's primary issuance that's kind of a big, whole issue in and of itself. Our solution specifically focuses on secondary trading, so it's somewhat limited in scope. I'm not sure if that got to your question.
Well, if you're doing secondary tradings from selling from one accredited individual to another, you would still need accreditation in that sense.
Right. So something like accreditation would happen through an identity keeper, where the accreditation process would be go through an identity keeper. The identity keeper would verify that, add a credential to a user. so that when a user interacts with an exchange or other users, they would be able to understand through a zero knowledge proof, yes, this is my counterparty is accredited, or my counterparty is not accredited.
That's kind of also part of the compliance regime, right? Because there would be a standardized module that determine, okay, under this classification, this type of token smart contract, it requires a transaction filter that screens out, that screens for users that have an accredited, accredited credential, right? And so that would be part of that classification scheme, where, maybe a different type of classification would be, a tokenized security under a different classification might be more broadly available.
So yeah, so an identity keeper, even if Coinbase were to start doing it, they would need to do some new things, right? This credential they'd be issuing would be different from what they issue today. And if they did accreditation checks, that would be different, although not particularly difficult. On the point about contract certification, I just want to point out that I think what Andrew and Billy were getting towards is that you can imagine, the existing workflow of a DeFi dev usually is you write some code, then you go to one or more auditors and get them to audit it. You bake in those weeks into your development process. It could be that those contract auditing firms decide, okay, this is going to be part of our business model. We'll also issue these certifications. And so they could get that they could register with the SRO to be certifiers themselves. But as Billy was talking about, maybe a sort of iterative DeFi development company like ABC Labs behind Reserve could just register to do that certification itself. That registration, in my view, could be just like registering to be a money services business, in the sense in how easy it is. You can just go on FinCEN's website and fill out some information and click a button, and you are registered to be a money service business. There's no application and waiting, because it's not a license that's being issued. It's just you announcing yourself and saying, hey, I'm doing this thing. And so in my ideal world, to register with the SRO to be a contract certifier would be a similarly automated process. You go to a website, you fill out a little bit of information, you probably use your, you would use your on-chain identity issued by an identity keeper, say, hey, this is my identity, I am announcing myself and saying I'm going to do these contract certifications, and that makes it an open, sort of permissionless, mostly system for anyone to join, but it does give the SRO the ability to revoke that credential. And that's essential because if the regulator determines at some point, or law enforcement, whoever determines, hey, this random schmo is certifying all these contracts and they actually don't enforce any of the rules, it makes it really technologically simple for the SRO to just revoke that credential, and now suddenly all the certified contracts, can no longer receive deposits of those regulated assets. So the idea is sort of free and open entry into the system, but the ability to revoke access to the system on a technological level, which would then be a relatively easy method of enforcement to make it so that any contract that's certified has to in fact implement the rules that the certifier said it's following. I don't know if that addresses the sort of sand in the gears that you were perceiving. If not, I'd be curious to hear a little bit more about how you're seeing it.
So I think there's a vastly different level of compliance that's necessary for something like a tokenized real-world asset that has a huge amount of legal and contracting around it, compared to the simple smart contracts that are being issued that in some sense are securities if they're promising payments to people, like something from Uniswap or Aave or something like that. This didn't come up, maybe this is what you had in mind in the presentation, but it wasn't really explained. Like I could imagine, and I do when I talk about regulation and write papers about it, I say we should have all these different levels based on the riskiness of the securities. It might be that some of them are like some minimal checks that you have to do to make sure that token is clear about what's in it, or even like a token standard that as long as you meet these, you qualify to be a simple security. But then just much more difficult checks for something like real world asset that would probably almost certainly need a personal approval to do that could take a lot of time potentially, right? And so laying out like, hey, there are different standards that people would need to achieve could help people that want to do DeFi and saying like, this is not going to totally interfere and destroy your business. But people that want to have the more complicated ones, there's an avenue for you as well.
I think that goes. We have thought a bit about that type of idea, and that's why we're keep on talking about classification. Why the idea of classification is very important, so that everybody has a way of understanding, like, oh, this smart contract does this, and therefore is subject to these rules. This smart contract does this, and is subject to these different rules, right? And really being able to identify this process, you need some sort of person, to actually be able to input, this classification thing. You can't do that automatically, right? You need to have someone in the real world take a look at the code and be like, yes, okay, this is what it is, right? So you can precisely have those things, right? And that's the idea behind like the class of, the regimes, right? The regime, each regime would be a standardization system that would specify the different classifications of smart contracts and the requirements. And you could have also things like, libraries of smart contracts that would simplify certain processes, right? Like, maybe there's just some, you can sort of imagine that you can sort of shortcut some of this classification regime with some sort of smart contract library.
Do you mean, so when you said classification, do you mean certification? Because I feel like one thing that, as we think about the outside parts of this, there are pieces that require like a person things that are like off-chain data. In order for that data to get on-chain, there has to be like some sort of like person who is attesting that this thing is true, because the blockchain can't interpret what off-chain data is true or not. It just takes the data that's given to it. And so there needs to be some sort of certification. And so, for instance, I think one of the core things as we think about the contract certifiers is like making sure that we're creating this regulated zone that Apple stock can just freely trade within. But if anyone can just, create, get a certification and anyone can just have a smart contract that enters into that, there's going to be tunnels into and out of the zone, and Apple stock's going to be freely flowing, and everything's going to get sucked out into, all these controls are going to be worthless. And so I think part of the challenge that we are working through is, smart contract code can't audit itself. There has to be a person that looks at it and says, yep, no tunnels here, and I'm willing to stake my reputation on that. This should have access to Apple stock. And I think that's part of what I think Billy said is like regulated securities come with regulations, and someone needs to like kind of make sure that those things are those off-chain pieces are being followed. You can't just they can't be automatically done by smart contracts.
To some extent, you can codify those compliance rules into smart contracts, but there are also companies that are working on oracles which translate off-chain compliance rules to be processed by smart contracts.
Yeah, I think I would understand this to be similar to that. And I think as I think about kind of what this system does is it kind of like translate, like, I mean, from like a philosophical level, there's like this, code is law or law is law, right? And I think part of, from like a philosophical level, what this system is like law is based on like a reasonableness standard, because there are individual people who are making decisions and it's subjective. And code can't run like that. You can't have like, well, that was an unreasonable decision for that smart contract to make. Smart contracts don't make reasonable decisions. They execute or they don't. And so part of the challenge of this system is trying to find a way to turn a law into a number that can be like 0 or 1. Does the transaction go through or not? And I think that by translating law into code, either through some sort of oracle system or through some of these attestations and auditing, you can enable compliance at the speed of smart contracts and DeFi.
Yeah, so that's an area I want to explore a little bit more, which is as we talk about replacing human-driven top-down. There's a top-down aspect and a bottom-up. So as we talk about driving the top-down from the Constitution on down into how we end up with regulations, how we end up with, should this transaction be allowed, all the way down to the bottom. What stops this from throwing away the Fourth Amendment? Like we end up with a system that has been very, I mean, first of all, really great work. I'm loving the work. But we end up with a system that keeps my privacy intact in terms of the blockchain, but does it keep my privacy, does it keep my Fourth Amendment right from the government? Like, or, you know, do I end up with all my personal information heading up to the SRO and from the SRO up to the regulator and into the court? Like, where is the subpoena in this that compels the release of my information based on, you know, probable cause or reasonable suspicion, and all of that? That's my top-up question. My top-down question. My bottom-up question is, what happens when my transaction doesn't go through? Like, what's my recourse? Like, what do I do? You know, was I mistakenly associated with a different Henry that was on a sanctions list? Was this pattern of my behaviors perfectly fine, but it looked like too close to something you know, a drug dealer might do? Like, so I have questions of both of those sides that I'd love to talk about a little more and understand the vision.
Yeah. So let me just give sort of the practical answer of how we think this system would behave with respect to those questions. But for the first question, I think it'd be interesting to open that up to 10 or 20 minutes of conversation with the group to see what people think about this. So if your transaction doesn't go through and you actually didn't do anything wrong, you're kind of in the same situation you're in TradFi. But instead of going to your financial institution that's holding your assets, you would be going to the transaction monitor in that ecosystem that you're trying to transact. So if you're trying to do a DEX trade and the DEX won't let you do it, it's because the transaction monitor that's been hired by the company or the DAO behind that DEX has, you know, given you a score that's going to stop those transactions going through. And so you could go to that transaction monitor. Interestingly, you wouldn't have to reveal your real world identity. You could just sign a transaction showing that you're the holder of that pseudonym in that zone. And, you know, you're just going to be opening a support ticket and going through the same process that you have to go through with PayPal or, you know, Coinbase or whoever would have stopped you from transacting. And so we think it basically ends up with status quo performance on that front, which I don't love, but we could not figure out how to do better. So that's like a good challenge of like, if anyone can figure out how to do better on that question, like, please talk to us. We are, you know, this group is doing the hard work to like try to work with regulators in the whole space and so on. So if someone comes up with a better idea, we can probably get it implemented. But that's the best we were able to land on.
Can I make a small suggestion?
Sure.
That has to do both with like the identity keepers and the transaction monitors?
Yeah.
Which is that instead of thinking them as monoliths that have a monopoly on a particular person's identity or on a particular transaction's validity, that it actually is more decentralized and federated in some way where my recourse isn't just go to the one who rejected me, but go to a Supreme Court of transaction monitors and say, no, really, I'm okay. Or go, you know, have that same mechanism that the identity keeper was described as preventing me from going to multiple identity keepers. Instead, think of that as an idempotent way of identifying me, and that now I can have a relationship with all the identity keepers that I care to, but they all know it's the same me through that same mechanism. So think a little less
Let's play with that for a
centralized.
minute. So let's take the case of a transaction monitor that's blocked you. Yeah, let's play with that idea of like, how could there be some other authority that you go to appeal? Yeah. We got a lot of brains here.
We currently have a couple things in this space which you may or may not be aware of. We do a little bit of liquidity support for Reserve and the DTFs. So we have a bunch of different liquidity markets that we work in. And one of those things is talking with Coinbase, as you guys mentioned, who has that attestation service to allow for the verifiability of those KYC AML pools. Another one would be Kraken and stuff like that. And what we found, at least from the conversations with our partners, is around more like RIAs taking out of qualified custodians, and how do you have like a policy engine very similar to your identity keeper plus, you know, certification, right? On like how do you get that done? I think to his point though, I think what he's trying to say is that if you have like Equifax, right, and all these other different credit score reporters, right, I can go to one or two and I can fix that. And if there's a jerk who won't fix mine, at least I fixed 2 out of 3 or whatever. And I think from that perspective, at least you have some kind of say a little bit in a situation where if you have a gatekeeper, right, and there's a lot of times when we work with AMMs where they'll hire us, right, and they could hire other people as well, and that may decentralize that liquidity backend. But you know, what's the recourse kind of thing? So that's interesting. But I don't have a proper steer protocol. Yeah.
So yeah, so you could have a handful of transaction monitors watching over any given ecosystem, and you as a user could choose, you know, I want to do this transaction. I see these 5 options of who I could sort of encrypt my transaction data for. I'm going to choose number 4 because number 1, 2, and 3 are not allowing me to transact. And so then it would sort of be like a, you know, N of N sort of decision process where you would always go to whoever would let you through until all of them decide not to let you through. That you know, sort of obviously multiplies the cost by N of the work that has to be done. So, you know, ultimately probably the user is going to have to pay for that. So it's like, okay, is it worth a 4x compliance cost in order to have, you know, that system? But yeah, so that's one idea. Any other ideas?
Well, so I think one thing that's important is what are the criteria that these, you know, transaction monitors are using? Is it a set framework that they're all abiding by, or are they like at their own will to decide?
So the idea, and feel free to jump in if you guys have thoughts on this, but on a high level, it's that, you know, a regulator would specify like, here's the ontology of like the types of financial crime that any given transaction monitor dealing with any particular type of asset would need to watch for and basically blacklist on the basis of. But similar to the system today, it would leave it to the judgment of the transaction monitor to decide how to do their internal scoring. So they would each have their own proprietary way of deciding, you know, how exactly they're going to manage that. And when we thought it through, we thought that was necessary because, you know, there's an ever-evolving landscape of, you know, fraudsters and people trying to sort of figure out their way around those algorithms, whatever they may be. And so if you were to just prescribe, here's exactly how it works, and every single company does it the same way, we think that makes it probably a lot easier for criminals to find ways around it, rather than leaving it to the proprietary art of each company. So that's how I think we're currently imagining it would work.
We have a bit of a gap in the understanding of the framework in how the classification system is engaged in these transactions. So you mentioned, if I remember correctly, on the presentation that there's like some attributes, right? Like, what does that look like, and like what might be an implementation of these attributes? And then related to the question of transaction monitoring, how does the classification system, how do transaction monitors use that classification system? Like, how might it look like in practice?
Yeah, that's a good question. Let's hold that for 1 second in case anyone else has any ideas on this front, and then we'll do that question, and then we'll go to the Fourth Amendment question. Does anyone else have any sort of alternate transaction monitoring and dispute resolution ideas?
Quick question, because kind of the way from everyone's discussion, I'm almost thinking about this like the transaction monitor becomes the DEX, and then we kind of need an aggregator, like the very simplified way, like an aggregator to get the best routing. So that could be like a possible way of thinking about this. If you have like multiple companies working as transaction monitor based businesses, that's the best outcome, because then you can kind of have another business model on top of that, that would be aggregating and kind of be helping to find the best routes. That's kind of just from my charlatan view on this.
Yeah. Yeah.
I see that like.
Yeah, your wallet application could decide where to route you, or you could have, there could be another, you know, piece of software in the stack that's helping to route. Yep.
There might be something in the precedence of literal fraud proofs that L2s use to challenge transactions or literally challenge fraud. It might be too mechanical the way that they're done now. This seems like it might be a little more subjective in what you were saying, like proprietary methods for assessing transactions and stuff. But maybe there's something there.
Okay, where like someone does a transaction and it's, it looks like the structuring step in money laundering, and somehow if that's recognizable to a series of parties, anyone can sort of step forward and somehow demonstrate that in order to
Well,
increment
you
the
get
blacklist.
blocked, right,
Yeah.
on that basis, and then you say, well, no, here's my proof that what I did wasn't in fact structuring.
I mean, I think that's a great direction, but I just don't know how you could prove that, because yeah, I think these things end up being very subjective.
We had a conversation about this actually before this meeting with the guy who was doing the ETF discussion, which was really, really good. And one of them was a discussion around can we maybe just bring out like DIDs, right? Like if the government issued your passport or your digital identity, at least, right, from that perspective. We were talking about Iran. If one of the guys was in Iran, he tried to open up his Charles Schwab, he got blocked, right? But he's a U.S. entity, right? And just because he's in Iran, or no, he had a VPN that put him through Iran, and so he couldn't see it. So he had to take the VPN off. And the question we started having is like, how could he not have to open a support ticket, right? And could it just be that I self-verify myself, which would be a fraud proof of saying, hey, here's my government identity that was issued by the U.S. government. That's a fraud proof on chain, so I can just heal versus having to have, that recourse step.
Yeah, it's just, when you think about the judgment of whether, was this transaction, insider trading? Was this transaction wash trading? Was this transaction made, with the intent to manipulate the price of an asset? I think it's going to be very hard to somehow prove in a simple way that like a smart contract could assess that it was or wasn't. But I would love to be proven wrong. So I think that's an interesting direction to think.
Is there a way, instead of creating a mechanism to automatically say yay or nay and block the transaction, similar to like the fraud proofs that Patrick was mentioning, have it mark it as suspicious that then the transaction monitors with their proprietary algorithms and logic and whatnot, so the transaction gets flagged to go to this pool of additional review that the transaction monitor has, maybe even off-chain data or whatnot to take into consideration?
Maybe, but it seems like that wouldn't solve the problem that the group is trying to solve right now, because you'd still end up in a situation where it's ultimately up to the transaction monitor to decide with their proprietary system whether you're blacklisted or not.
I'm sorry. Yeah.
Well, I was going to go back to Yvonne's question. So Billy or Andrew, would one of you be willing to give a basic example that sort of explains what we mean by attributes, the sort of simplest example you can give that kind of explains what a transaction monitor would be observing and classifying in one of these like blacklisting scenarios.
Yeah, so you could look at something like,
and let's make sure to speak into the mics so that it makes it onto the recording.
Yeah, you can look at something like maybe insider trading is a good example where a traditional bank might look for a suspicious pattern of activity, something like you had a particularly timely trade before a major news event. So let's say, Apple announces some partnership with a new company that spikes the price of a stock by 20%, and you traded within 3 hours of that news event. So that 3 hours is kind of a variable piece of information where you could say is if you traded within 3 hours, is that suspicious, or does it need to be within 3 minutes, or does it need to be within 3 days? So a pattern that might indicate that you have insider information, could be up for interpretation and judgment, which is some of what Nevin's talking about. That would be hard to prove that you knew about an event as an insider. But that's something that would be an attribute. You did a trade with a security within 3 hours of some major news event that affected the price of the stock. So that attribute might be determined that goes into the classification of insider trading.
And that might be recorded by a transaction monitor and may not prompt you being blacklisted. It's like everyone's going to occasionally do things that might trip some of these flags. And it's only if you do enough things or a sort of smoking gun enough thing that the transaction monitor would put you over the threshold. And then in terms of, you can think about the broader market forces here. If you're a DeFi developer and one transaction monitor has a reputation for just like blacklisting people all over the place, well, you're not going to hire them, right? Like they have an incentive to try to sort of split the difference between being as permissive as possible so that they get business and being, as sort of protective as possible that the regulators don't basically revoke their ability to perform this function or take them to court for, not following the law.
Okay, so my high level understanding was right, but I was more so referring to like how might this be implemented in practice, because that like knowing that an event happened and you reacted to it involves access to off-chain data that needs to be accessed and added to some attribute, whatever the implementation is, right? Appended to the list of attributes of a transaction that requires transaction monitoring and access of off-chain data. And then like at your previous point, both on the contract side and on the identity keeper side, you need to be able, these attributes need to be able to be mutable and to change depending on your history of transactions on chain. How do you envision that happening, and is there an implementation in mind of how this might work?
You guys want to talk about that?
Yeah, I think if I understand your question right, I would say, some of it might have to come from off-chain information. So, to further add some complexity to this example, your identity attribute might be that you are an employee of Apple. So you get a second attribute that says you're an Apple employee. And then that's combined with your timely trade attribute that says, all the transaction monitor knows about you that's just on-chain data is that you had a very unusually timely trade. And maybe there's a third attribute that says you've never traded Apple stock before. You just so happened to trade, 10 minutes before the spike in price. So there's 3 attributes. 2 of them come from the transaction monitor. 1 comes from an identity keeper through, an on-chain mechanism that Billy talked about in more detail. Those 3 attributes are combined, and it says, if you have those 3 attributes, we've decided that you are high risk because those three things combined together seem to indicate that you're high risk for insider trading.
But I want to add one piece of context here, which is, we're not necessarily saying that the system should keep track of who you work for. In the same way that when you open a bank account, you don't have to report who you work for and like update your financial institutions on those sorts of things. And for that reason, maybe your brokerage company has no way of detecting that it was likely an insider trade because they don't know where you work. And so I think the same sort of status quo of what information you would hand over would probably apply here. We're not saying that we want to increase the information. And so what I would say, so I think an implication of that is there's some types of things that'll be easier to detect based on-chain information alone, and some things that'll be a lot harder to detect. We've been talking about a case where it's highly subjective, and it would probably take, a further investigation by law enforcement because it was like a, $100 million trade or whatever, and they really care about it to actually get you in trouble for that. But something that might be quite a lot more clear is if you do a sandwich attack, right? That's something that is like totally obvious on chain. It's like, okay, we can say for sure that this person almost certainly, paid this node operator to sandwich this transaction and extract this value from this other person. And that's something where like sandwich attacks, in my opinion, are like a crappy feature of DeFi right now. And under the system, they would basically go away. Because if you were to perform one, it could easily be traced back to your real-world identity, and I think they should be illegal. And so that's something where you really don't need any off-chain information to tell like pretty clearly, and basically take an enforcement action, or at least just ban that person from trading on that DEX anymore.
And just to back off that, you have the contract certifier as well. And one other issue, right, is lending markets where you have this asset tied to an oracle, right, which you create, which then you use as an exploit attack vector. Another thing is like that asset could be killed, right, or blocked from that zone.
Yeah. I mean, yeah. Yeah, I think we'd have to go deeper into that to be sure, but I think the answer is going to be yes. I want to bring us back to the Fourth Amendment question.
One last thing there, though. It's 2 points. One is so that requires like imputing additional information or sourcing it from whatever. And in the case of pattern matching, or I guess detecting sort of like abnormal behavior, that requires a set of rules and a set of like patterns that you're matching. Like if you want to flag that Jared from Subway is sandwich attacking people, like you need a set of rules, and who's going to set those set of rules, like the logic to perform the pattern matching in the transaction? Is that the transaction monitor? Or?
I think that with something like that, you could say, a regulator could specify something as abstract as front running. And then a transaction monitor who's crypto savvy can say like, well, a sandwich attack clearly involves front running. There's like no ifs, ands, or buts about that. And then they would program their software to detect transactions that hit certain thresholds, and those would raise a flag. Maybe a human would look at it and then say like, yep, this was pretty clearly a sandwich attack and therefore front running, which is illegal, and so such and such consequences would follow.
AI is really good at that. Like AI ML will take care of a lot of that.
Yeah, that's a good point. And I think a lot of these companies are going to be using various types of machine learning already, and so that could be applied here. Henry, on your question about where's the subpoena, how does this information flow? First, let's talk briefly about how it works in the system today. And it's an interesting question whether it's a violation of the Constitution or not. But if you commit something that any of your financial institutions believes is merely a suspicious act, not necessarily an illegal act, they are required in the United States to basically report that. It's called a suspicious activity report to either FinCEN or FINRA, depending on what type of financial institution they are. Those reports are all put into a single database, the SAR database, and access to that database is open. Well, I shouldn't say the word open because it's closely guarded. You have to be approved to access that database. But many, many different government agencies, including non-federal government agencies, like state and local law enforcement, end up with access to the SAR database. And so if you're part of law enforcement and someone is suspected of criminal activity, you can just go type their name into the database and see what pops up and see like, well, have any of the financial institutions out there reported some sort of suspicious activity for someone who has a name similar to this? And that is a very common step in investigations. So that's come to be depended on by, lots of bodies of law enforcement, some more than others. And so did you want to
Yeah, but it starts today with them having another reason to be investigating you. It isn't a database that gets mined for patterns of activity. So at least that's my understanding of the SARs. So it is a forensic and investigation tool versus a crime detection tool.
Well, it can be used both ways. There's nothing legally that prevents government agencies from, running searches over the SAR database. I'm sure if your name appears in enough SARs, eventually that's going to trigger an investigation. I think
they do have
likely.
people whose job it is to look at the SAR database and look for criminal patterns.
It's not that every single financial institution reports every single account holder and every single transaction to the government. It's only if you do something that is above the bar of what is deemed suspicious. And that is essentially the pattern that, if our proposal here gets adopted, would end up replicating. You'd end up having a situation where if a transaction monitor detected something that they believed to be suspicious, according to their algorithms or their human judgment, they would more than likely be required to file a suspicious activity report with the relevant regulator. It's a little bit different because they don't know your real-world identity. They only know your pseudonym. But more than likely, what would end up happening is, because the current apparatus would want to maintain its SAR database and its ability to run these checks based on name and address and so on, more than likely what would happen is that would be submitted, and then an automated process would occur to ping the identity keeper and get the real world identity and connect it to that suspicious activity report so that their database can continue to be indexed based on your name, so that that investigative tool would continue to exist. Now, is that a good thing or a bad thing? We kind of had like a week where we were like, is this okay? Like, should we really push back on this? Like, is this the moment to like change that paradigm? Or should we go along with momentum and allow that to persist? And ultimately, I kind of started the week thinking this is bad and we should push back on it. And I ended the week thinking, honestly, I think that we should go along with this and that this is an okay system. Modulo sort of like authoritarian government scenarios, like maybe it ends up being bad in that case. But essentially, if you look at the history, the only breaches of the SAR database we were able to find were whistleblowers who leaked information about essentially SARs that had existed for a long time that had never been acted upon by the government. So they're basically saying like, look, the banks and the government are like incompetent. They're not like enforcing on these clear criminals. Other than that, like we couldn't find any cases of it being hacked, which is pretty impressive. That doesn't mean that will be true forever. It's also the case that these suspicious activity reports are treated as, I don't even know what classification to use, but like basically like highly sensitive secret information that can't even be admitted as evidence in even like federal court cases. So you can't like the whole thing is just like very secretive. Financial institutions can never tell someone that they submitted a SAR. And if you get information as a law enforcement officer about someone from a SAR, that can help you in your investigation to connect the dots, but you cannot use that in part of your court case against them. And I honestly don't fully understand why that is, but I think it's kind of that they don't really want people to know like the type of information that exists in the system.
They don't want to. Well, it's because they don't want, if you know that someone's investigating you, then you change your behaviors, right?
That's true, but
it's classified as intelligence.
Yeah. So I don't quite understand, but so anyway, I just wanted to offer that context. That's a little bit about what we learned, and the reason why I ended up thinking it was maybe a net good system is it seems like it's a pretty helpful tool for law enforcement. It seems like in the history of the system so far, the information has never really been leaked in a problematic way. It seems like only information about people who are at least doing suspicious stuff is what's flowing to these government agencies. And so, yeah, just in sort of like a overall good for society, cost versus benefit sense, it seems like it's positive. But yeah, on going back to the Fourth Amendment question, like, is it somehow constitutionally problematic? I'm not sure.
That the connection in the diagram that maybe had me curious was the fact that it was the connection between the identity keeper and the SRO versus it going straight to a governmental agency that maybe definitely is covered by the Bank Secrecy Act, which is the secrecy I was referring to, which is, I think, what makes all this stuff kept so highly confidential, is that compromise between we want visibility into the banking system, but we want to preserve people's Fourth Amendment rights.
I see. So you're just pointing to, or not just, but you're pointing to the possible risk of what would happen if that information was aggregated within an SRO as opposed to only being accessible by government agencies. I think that's a very legitimate question. Yeah.
I have a question related to, since we seem to be focused on regulatory, but traditionally incumbents enjoy the most regulatory favorability. And in terms of identity, yesterday we talked a lot about Social Security, but really, they own the game in terms of identity now. Could they come into this system and enjoy that? And then in terms of transaction monitoring, I mean, we touched on so many good transaction monitors, but I think most are kind of human right now. But like even levels up from this, we kind of have the NSA enjoys a telemetry to your metadata that this doesn't provide, So kind of how do you see regulatory responding when you start coming up against maybe some of those considerations where yesterday I heard the phrase, we can't touch Social Security. So how does that, merge with identity management kind of in this regime?
I'm happy to speculate on that, but do you have any opinion about it? Do you have a guess as where you think it would go?
I think, I mean, that's why I framed it the way I did. Would they opt into this system, as a player rather than the player?
There are zero knowledge solutions for identity where you can prove something to be true, whether you can trade a specific security without really revealing any information about yourself. I think it's very novel. We have a lot of identity solutions across a lot of different L1s. There's really no, I think that's a great failure of us as an ecosystem to converge on a set of identity solutions that are cross-chain, but I think to your specific question, there are solutions that fit your needs.
I would also say, I mean, as I think about Social Security, I feel like the Social Security number became everyone's unique government ID pretty much by accident, right? If you think about how they started using it, Americans, and I think we've had this debate a lot when we start talking about federal IDs and just like a move away from like your Social Security number is like the number that proves that you are you. There have been a lot of challenges that come with federal moves towards like, I mean, think about Real ID that passed in like the early 2000s and just went into effect like a couple weeks ago because basically Americans really don't like the idea of like the government, the federal government having a database where you have like your name next to some number. But also, I mean, as part of the Social Security number, it's like 6 numbers that like correspond to like what state you live in and like what hospital you were born at, and then like 4 random numbers, and it's not a secure. Like, I mean, Billy's has a PhD in math. He can talk about how unsecure that cryptography system is. So I think as we think about DID and the future of it, I mean, the identity keeper, it's a job to be done. But as we think about a future where some DID is filling that role, that doesn't need to that half doesn't need to exist because it would just automatically be on chain in some form.
I guess, and then kind of a follow-up, because just my role, I represent large token holders at DAOs as a delegate. What kind of upgradability do you see in this towards, in a lot of cases, it's harder to upgrade a legacy DAO that has a ton of value locked into it than it is to just make a new one that does this thing. When you add significant complexity, how have you had conversations with large DAOs about how this might look?
No, that'd be fun. I think, mechanically, you would just need, as a DAO or as a DeFi application, right? I guess is what we're talking about. You would need to receive the relevant smart contract certification credential before all these tokenized securities under this single standard would be able to be deposited. And so you would have to upgrade, more than likely, right? You'd have to include some additional logic. So if there's like a fully static DeFi application, it's not going to be able to do that. If there's one that has, fully general smart contract upgradability through decentralized governance, you could totally do it. If it's somewhere in between, then, not sure. And so, but I will point out that there's nothing in this system that makes it so that regulated and non-regulated assets can't coexist, right? So you could have a DeFi application that allows all sorts of ordinary native tokens alongside stablecoins, alongside tokenized securities, alongside tokenized commodities. You could have securities from 5 different countries. They could all mix and match as long as the contract has whatever certifications it needs for each type of token that follows such a regulatory framework. So that's not quite commenting on the upgradability question, but just sort of sketching out what is the end state end up looking like if you were to use this system for like global regulated tokens.
It's an important nuance, because like right now it's basically Aave or Aave Arc, right? Or like whatever, you have institutional options that you can't commingle. But if you could have assets flowing side by side, regulated and non, that it's wild to think about. But yeah, thank you for that.
It's just picture this, except for instead of Canada, it's white.
On that topic, when you think about how a DTF might interact with this, would it be something like the people who were causing the DTF to mint would need to be in the zone if there were any regulated securities in the DTF, and the DTF would be a contract that would be approved in the zone?
I mean, DTFs, reserve or otherwise, are sort of, some of the power users of this cross-token functionality because, we might want to bundle more different types of tokens in a smart contract than most other DeFi apps actually at a time. And so, yeah, if you think about it mechanically, if you go to mint or redeem a DTF, well, okay, first off, forget about the minting and redeeming. The DTF contract itself would need to have whatever certifications necessary. So if it's 100 different U.S. securities, that might just be one certification. But if it's securities from 7 different countries, maybe that's 7 different certifications, which I realize that's more cumbersome than present-day DeFi development. But hey, it makes it possible, which today it's not even possible in the first place in a legitimate way. So the contract would need to get whatever certifications to cover the different asset classes. But again, it's just one per regulator, basically, as opposed to one per token issuer, which is the default whitelist situation that's going to develop if we don't do something like this. And then, yeah, as a user, you would have to, it's a little bit different because it's not that you would need a certification. So let me tell you my slightly utopian idea for how this would work. As a user, let's say you're a user in France and you get your identity credential from an identity keeper that's in France. And now you want to access, first off, let's just say a single American security. Well, if I'm the regulator in the US, I'm going to be interested to know, well, if this French person violates our securities laws, they like wash trade, for instance, then, are we going to be able to get the information about who that wallet is or not, right? Because you can imagine American authorities go to the French identity keeper and they're like, hey, who's this person? And they're like, ha, 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 we're not going to tell you, right? Even if the company wanted to, it could be that their local laws, their data protection laws, wouldn't allow them to, unless maybe the user had authorized that or something. And so the way that I would like to see it work, the best idea we've come up with so far, I think, is that you as a user, if you're like, okay, I want to access the American market, you check a box within MetaMask or Phantom that just says like, yep, I'm okay with American regulators getting my information from my identity keeper if they get a subpoena, basically, or whatever due process is in that case. And so you leave it to the user to decide that. They just do something on chain that basically gets submitted with that transaction, and that is legally, in the contract that they set up with their identity keeper in the first place, that's legally authorizing the identity keeper to share the information with the regulators in that market. Now, at the same time, if you're like, I'm not comfortable with my information being shared with the Venezuelan authorities, you just don't check that box. It means you don't get access to Venezuelan securities, but it leaves that decision of like, who does your information get shared with? It leaves that up to each user, which I think is actually an elegant way to deal with it, making it so the user can choose which part of the world they want to deal with. And so then going back to the DTF example, if you wanted to mint a DTF, that had, 7 different types of assets from different jurisdictions, say, you would have to check those boxes. And if you were willing to for all of those, because you would be purchasing those assets and depositing them, then the whole transaction can go through. If it contains a Venezuelan security and you're unwilling to touch that asset, then you wouldn't be eligible to mint that DTF.
A good question that becomes what happens when we want to start changing the underlying basket of assets through the governance. And maybe...
Totally.
Okay, we need to wrap on up. This is a great discussion. I was
thinking like, okay, now our guys want to do Argentinian securities. Okay, thanks.
I think we can continue discussion over coffee and then maybe over drinks tonight.
Thanks, everyone.